Good morning and welcome to the August 22nd edition of the Gold, Goats, and Guns Market Review. My name's Tom Luongo. It's Wednesday. Let's get to it. All right. We've got a lot going on. And the last couple of days have been a whirlwind, from Paul Manafort getting indicted on 8 counts of tax fraud, stuff irrelevant to Trump, to Michael Cohen, Trump's lawyer, turning over and becoming the Clinton operative that he's always been over the Stormy Daniels case, to all of it, right? And to the reminder that the 49-page memo that was found by Gateway Pundit back in January of 2017 between George Soros and David Brock of Media Matters, and how they were going to impeach Trump. If you don't think that this is what's where we are right now, then this is what's going on. If you don't think that that's what's happening, then you're fooling yourself. This is the full court press to get rid of him after the midterms. And if the midterms don't go their way, the midterms are not going to go their way. What that picture is showing you is just how much support Trump actually has on the ground. And the amount of desperation and gaslighting that we're seeing from every corner of the establishment. And I really do believe that the level of hysteria is not only palpable, but reaching a fever pitch, because they don't know what else to do. All they've got is nuts and sluts, as the Raging Cajun once termed it. And the problem is that we all didn't vote for Donald Trump because we thought he was the most stand-up guy in the world and the greatest husband. We voted for him to blow shit up. We voted for him to get rid of these people who are outing themselves every day as the kind of evil oligarchs that we always knew them to be. And it is truly the ideological and political legacy of Ron Paul and his insurgency runs within the GOP in 2008 and 2012, which have set the stage for this. And they're not going to give up power willingly. And we're going to see it used in the most egregious manner before it all comes collapsing down. And it's going to be a very rough couple of years. And we can see this happening. They're fomenting a civil war. They're fomenting whatever they have to do to win. Alistair Crook yesterday over Strategic Culture, the day before, and I'll have a link to the video, to the article down below, described their existential crisis of basically the Davos crowd, as I like to call them. They don't know what to do. They're under attack everywhere from the revolt of the people and the swing away from them. This is a classic example of the pendulum swinging backwards, because everything in these markets and everything in human behavior is cyclical. And we've reached the limit of what we're willing to accept from these evil people. And it's not just the United States. It's all over Europe, especially Eastern Europe. And it's going to continue. And no matter how much they try to maintain control over the institutions of power and the levers of power that they've had control over for so many years, they don't realize that no one believes it anymore. And we're really reached that moment of just saying, you know, the heck with you people. The hell with you people. Just stop it. When we go one step further, and we've been talking about this on my live streams, and we've been talking about this, and I've been talking about it obliquely in some of my commentary. And again, this is one of those scenarios where I'm about to lay out for you that I'm not really sure I believe. But you have to explore it. Intellectual honesty requires you to explore stuff that you're not sure are true. And so one of the things to remember when you're reading my work when you're reading the blog, or you're reading my work or whatever, or you're listening to me talk, I'm going to spin scenarios that I'm not convinced of. And I reserve the right to change my thesis, my hypothesis, with new data, right? So this morning's big news, which is not being really discussed at all, is that Germany's foreign minister, Heiko Maas, came out and said, look, we need a new monetary system. We need a new international financial payment system that allows us to act independently from the edicts of the United States. That the United States has now weaponized the dollar to the point, and has weaponized the SWIFT international electronic payment system to the point where it's making it impossible for us to do our business. Now, there's a lot of sides to that statement, right? I'm not all that, sanguine about who Heiko Maas actually works for. But the truth of the matter is that this came out 3 days after Merkel and Putin held their summit. We talked about this on Sunday, and we didn't get much of a committal statement from them from anything, and we got mostly a lot of pictures of them sitting on a veranda. If you remember the picture from Sunday's market report and the kind of charm tour, right? The color timing on that picture was all lush and green, lots of reds. It was very warm. Putin and Merkel sitting down having a lovely chat together, as opposed to, what we've seen between Merkel and Trump. And so this is, I think, and it could easily be another one of these moments where this is the globalists in effect fighting back by using the European Union as a means by which to fight against the things that Trump is doing. But at the same time, it could just be a catastrophic mutation, right? Born of tremendous pressure, right? Catastrophic political mutation born of extreme pressure that we're seeing right now. And it could easily be that this was Trump's plan, right? We've floated this idea in the past that, and I've said this before, that to me, it's very possible that Trump's extreme pressure on Iran, which is cheered in Israel, which is cheered in the globalist circles, right, to get rid of the Iranian theocracy, to say we're going to stay in Iraq forever and we're going to stay in Afghanistan and all this stuff, and we're going to put pressure on Turkey and they're going to stay in NATO, and that they all love that stuff, and Trump is willing to play along with that. But the truth of the matter is that it's putting tremendous pressure on Germany, which is exactly what Trump wants, and that's putting even more pressure on NATO. For the German foreign minister or finance minister, I'm not sure who Heiko Maas, I can't remember off the top of my head, I'm sorry, and I apologize for that, but he's one of the three most important people in Merkel's current cabinet. So it doesn't, in Germany, for him to come out and state that we need a new SWIFT financial system, new version of SWIFT for Europe, is a seismic event in geopolitical terms. And someone asked me this morning on our private Slack channel, what does this mean? How quickly can they spin this up? And the Russians spun one up with internal opposition to it in less than 2 years. It's not that difficult. It's just a network, and it's just a protocol. And a SWIFT compliant protocol is not particularly hard to implement because they already have the code to implement SWIFT codes in the first place. So it's not that tough. China has their own version. The Russians have their version. The Russians are not only rolling theirs out, but they're now tying it to the payment system, their local payment system, Mir, and kicking Visa and MasterCard to the curb. I mean, this stuff is real, and and the more the Russians do this, and the more you see this, the greater the histrionics get, the worse the sanctions get. And the more pressure you put on these systems, the more they're going to revolt against it. I can't stress this enough. Okay? So, yeah, this is all going to be good for a little while. And then you've got Trump out there. It's all going to be good for the United States for a little while. And you can see it this morning. The yield curve is collapsing. The yield curve is tightening, right? But U.S. Treasury bonds are falling in yield. They're rising in price. Stocks are still holding their own, if not rising, still rising slightly. Gold has gotten off the mat, and I'll show you the chart of that in a minute. So you've got all this stuff happening, and then Trump's out there complaining about a strong dollar, and now he's fighting with the Fed. Neither of them are really driving these markets at this point. I mean, they're kind of driving perception, but they're not. But what's driving these markets is the fact that the euro is a mess. Emerging markets are over-levered and are getting, like Turkey, and they're getting crushed. Trump is sanctioning and tariffing everybody, and everybody's like freaking out. And liquidity is drying up everywhere, and it's drying up out of Europe. And the longer the ECB and the Swiss National Bank try to hold the euro together, the worse it's going to be. The more capital is just going to fly out of there. And that's only going to put more pressure on emerging markets, which will put more pressure on the carry trades and yada, yada, yada. And so while we've got a bounce in the euro, and again, I'll show you that chart in just a minute, it's not technically significant, though we could have an epic short squeeze here in the euro, but I sincerely doubt it. The volatility is only going to increase from here. It's going to be very interesting to see how this plays out between now and September. And, part of what's going on here, part of the reason why the euro has been able to bounce the way it has is because of these bombshell political reports out of the United States, which then puts pressure on Trump, and the markets rightly see that as volatility within the U.S. government institution, and therefore a repudiation of the currency. So, interesting to see the way this plays out. All right, let's get to the charts. So here's the situation in gold. We talked about this on Sunday, right? That it broke support at 1208. There's the 1208, right? This is the 1208 support line in here. And then we move down into this level at around 1190 or so. And then there's the 2016 low at 1127.30. Notice what we have here this week in gold. Now, this was a huge move last week. This was like a 2 sigma move. And it wasn't even really a 2 sigma move. I mean, the range is normally about $40, and so a $40 move in gold isn't that big a deal. But notice that so far this week, we've only had a $15 move to back up to the upside with about a $20 range. We're in the middle of Wednesday. There's only 2 days left in the week. And what have I always told you about gold? Inside bars, where you don't break the previous high nor the previous low, are generally considered, generally in gold, are pretty, and I don't mean generally, they're a pretty strong indicator of reversals. That inside bars are almost better than classic reversal signal as leading indicators of reversals in gold. Happens all the time. And I know I've shown that in a previous market report. I can't remember which one, but it was recently, the last couple of weeks. So it's something for you to consider and for you to think about here. Even if we don't get a move back above last week's high, which is around 1225 or so this week, it would set it up. Any close above 1208, certainly this week, would then set up for a move to above 1225 next week and to see a major reversal. And that would also mean then, the beginnings of a short squeeze. And then the question is this the big spike bottom that we've all been talking about? This is a big 14-week downtrend or whatever. This is insane that we've had this washout, and then we could see another move higher. But we could also see this up in an impulse wave up to around 1250 or so, and then another fall if we get tremendously more volatility in the markets. But the fact that gold is doing this while the euro is rallying is actually really quite interesting, because what this is telling you is that normally, well, I mean, it's interesting that it's happening with the euro rallying, because that's kind of a standard move, right? Weak dollar, strong gold, and weak dollar, strong euro. Okay, fine. So this short squeeze, does it have legs? Well, we'll find out. 116.29 is our cue for this week for a potential 2-bar reversal in the euro. Now, I'm watching it this morning, and the closer we get to the European close this morning, I'm doing this about 10 o'clock in the morning, we're backing off from this $1.16 level and starting to see weakness also in the euro-yen cross and the euro-Swiss franc cross. It's pretty obvious that the Swiss National Bank is trying to prop the euro up and does not want it below like 114 or so. That's the target. I think that's the level they're trying to target right now. Is right at $1. It's like 114, the euro to the Swiss franc. But again, if that happens, if that continues, if they're able to pull that off for a while, all it's doing is keeping a market that wants to drop from dropping. So guess what's going to happen later? It's going to drop more violently when the Swiss National Bank has to finally, cry uncle and reverse all their positions. All right. So let's watch the euro here carefully. This is your signal for the week as to whether or not we're going to get a further move back up towards $1.18. I think that's what the Swiss National Bank is trying to set up here. They're trying to set up a trading range between 115.5 and $1.18, get us back into this range. And I don't know that they're going to be able to do that. A lot of money was expended over the last 3 or 4 days to try and push this over the last 7, 8, 9 trading days now to push this back up to this level. And if this fails, the shorts are should be piling in here. All right. So And then the last thing to talk about is Bitcoin. And while Bitcoin has been interesting this week, as noticed, we got, not only did we get a, we talked about the fact that this was a low volatility bar and set up a high probability that we would get a break to the upside, and we have so far, and Bitcoin's currently trading above last week's high, which is a good sign. It broke above it, so the possibility of us hitting attacking this low again sometime between now and Sunday is pretty low, or at least violating it is very low, and this is setting up for a nice move. Now what we're looking for again is a kind of 2-bar reversal signal that moves us back up above 71.50. Again, not saying that that's going to spark the new bull market, but it could easily begin to set up this nice tight trading range between, say, 5,800 on the low end and 8,000 on the high end, and give you a tradable range for a while the rest of the market tries to figure out what's happening, right? If we start to get a move in the euro down, and we start to get some real capital, start to get even more capital flight, I think we'll start to see some fireworks in Bitcoin. I don't think we're going to see any moves in the altcoins yet until we get back above 10,000. So that's the reality there. So for altcoins that you're looking at, for altcoins that we hold in our portfolio, you're not going to see much of a move. I think you'll probably see a move in the bigger ones like Ethereum and others first, and that will probably come if there's any structural strength in Bitcoin above 7,000. We start getting back towards 8,000, and there's any solid news out of the Ethereum Foundation. I think you'll see Ethereum move back up above $400. But other than that, right now, I think the move right now, all eyes are on Bitcoin, and no one's really looking at the altcoins at this point. The bull market will have to resume for that to happen. All right, so that's what I've got for today. If you have any questions or comments, leave them in the below, and we'll get to them on Sunday's market report. I'll leave a couple of links in the article to go along with this, and we'll talk soon. All right, you guys take care. Keep your stick on the ice.